we've heard indications from the Bank of Canada and yesterday from the Bank of Montreal CEO that Canadian firms are reconsidering their investments in light of all this tariff turmoil and the threat hanging over the economy. Now, weak capital expenditure by firms has been a problem for years in Canada, and our guest says this problem could be worsened by the tariff turmoil. Let's get more from Claire Fan, an economist at RBC. Claire, thanks very much indeed for joining us. So we've heard about this, that CapEx in Canada, business investment, has been too low for too long.
Right, absolutely. I think as a starting point, and this is really kind of what we were expecting even ahead of today's release of the 2025. So sort of what businesses are expecting or really sort of intentioning to invest for this year was that, it's been a really rough 2 decades for Canadian business investment. And the starting point is so soft. So soft that even despite a rebound that we're expecting in 2025, the picture really doesn't change. That, look at some of the measures. If you do calculation, controlling for some of the factors, including growth in worker, we're back to where we were in 2005.
Whoa. And you have a chart for us in 2017 dollars, and we can see, as you might expect, in the pandemic, it plunged. It has recovered, but there really hasn't been much increase, despite our growing population, for example.
Right, exactly. So, the numbers today themselves did point to a 5.5% overall increase in CapEx, and the same number sort of rate of increase among private Canadian businesses in 2025, which is in of itself good news. But there are, like you said, a couple of caveats, right? Number one is the fact that the survey, where the sample period for this particular survey actually predated everything that happened on the trade front, actually predated sort of when early February period, where a lot of these trade uncertainties were really intensifying at the time. So I think it's fair to assume that obviously from now relative to then, that a lot of investment decisions were intentions, particularly in the trade exposed sector like manufacturing, have probably been dialed back a little bit, right? So that's number one. And then number two is also worth it to point out that this survey actually only gives us nominal numbers, right? And as we all know, inflation has been a big problem for consumers as well as businesses. So relative to 2019, we counted effectively all of the increase in sort of business investment were due to prices. So to what extent does that 5.5% reflect businesses just expecting costs to go up again in 2025? And to what extent does it really boil down to real tangible improvement in business investment intentions in this year is the other question. So controlling for those factors, we would think that the actual picture right now is probably not as optimistic as the numbers would have suggested.
Why have, just over the years, why have Canadian companies been loath to invest heavily in equipment?
Right. So, it's, again, been a rough 2 decades. Spanning from sort of the 08-09 financial crisis when business investment did take a bit of a hit. But since then, it kind of rebounded a little bit. But then there was the 2015-16 oil price crash where, financially is just one sector in the economy that was getting impacted really severely, where financially there was never been a rebound in oil and gas investment pretty much. So structurally, investment has been lower since then. Obviously, 2020 was the pandemic. Where a lot of businesses were really setting money aside, kind of similar to what we're seeing right now. Instead of investing the cash or cash equivalents that they have, they're setting money aside for contingency reasons. And then interest rates, as we all know, started to rise in 2022, and financing costs also was rising as well. So it's sort of been, different waves of different shocks that's really curbed business investment right now. And latest, of course, we do have the trade uncertainty that's curbing what could have been a rebound. Domestic demand looks to be rewinding. We're recovering into a certain extent, and interest rates are dropping. This is a moment where Canadian investment could be bouncing back, but it is not, and that's largely due to sort of the tariff uncertainties that we're seeing right now.
And it is a huge determinant, isn't it? A huge factor in productivity per head, business investment.
Yeah, absolutely. And which is why we tend to compare growth in business investment to the growth rate in the workforce. And the fact is that, especially since 2019, businesses' spending has been lagging sort of the growth in workforce. And that is why it's not really surprising to see growth in the Canadian economy since then, predominantly coming from more workers, right? Due to a rising population, more hours being worked, but not so much coming from labor productivity. Actually, not at all since 2019.
I'm trying to think. The resource economy is, of course, very capital intensive, oil production or mining by its definition. But services, I suppose, it's not such a clear picture.
Right. That's definitely correct. And, structurally, the Canadian economy has been transitioning into this more service intensive. But on that is actually really interesting as well, because some potentially discussions floating around saying services sectors and how they are largely more immune to the tariff threat or uncertainties in the near term, which is largely correct if you're comparing them to manufacturing sector, which is obviously the most trade exposed again. But interestingly, and we're just working on a piece right now, services sector, a lot of sort of the services value added to the economy is actually tied to goods trade. That means the sector largely might not be as immune to these uncertainties as people often think.
Claire, thank you very much indeed. Claire Fan, economist at